Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment markets. Well, I want to talk a little bit more about market corrections. As you know, we've kind of settled down on the volatility from the last couple weeks. We officially hit about a 10% correction overall in the equity markets. By the way, year to date right now, the equity markets are either up a little bit or flat right now. So we're actually not negative on most indices year to date. We're kind of flat or up a little bit. But what I will tell you is the bond market is a whole different tale. And I've been warning investors about this the last couple years, that eventually the economy is going to gain traction, which it's starting to. Interest rates last year, we had 3 interest rate hikes, 3. I expect 3 more this year. And so what's happening now on the bond market side, depending again what types of bonds you own, and I will tell you the majority of investors, not our clients in our opinion, but the majority of investors outside of our management are in the wrong kind of bonds. The reason I know that, because of the new clients that are hiring our firm every day, we're seeing the kind of bonds their brokers, their Wall Street firms, the banks are putting these people in. And bottom line, in the next 3 to 5 years, if we continue on this path of a better economy and higher interest rates, those bond investors are not going to be happy campers. Look at the TLT, the iShares. It's an ETF that tracks the 30-year government treasury. Again, one of the safest investments perceived in the world, down year to date around 5+%. You look at the 10-year treasury negative. You look at most bond funds that own corporate bonds or government bonds. Most of these are negative year to date, while the equity markets, generally speaking, are either flat or up. So again, there's not just risk in the overall stock market. There's risk in every asset category. If I look at the next 3 to 5 years, I firmly believe not only will our clients be extremely happy, but they will be pleased that active management was in play. The reason I say that is there are times you don't want to own certain asset categories. Some of the categories that I've talked about repeatedly on my TV and radio show the last 2 years, don't own oil, which we don't, which again last year was horrifically bad. This year again is off to a bad start. I talked about utilities, again bad start, this year down over 11%. Bonds again, and commodity type funds. But I continue to see Wall Street type firms, new accounts coming to our firm that still own these investments that shouldn't. And the reason they do is it's called blind asset allocation. Over diversify the portfolio. Own a little bit of everything, and so basically the good stuff gets watered down with the bad stuff, and then your returns become either very mediocre, but you still have risk and you still have that downside. So we don't believe in that. We believe in asset allocation and proper diversification, but not over diversification or what we call stupid diversification. Own relatively strong asset categories that have relatively strong earnings potential, that have that real opportunity over the next cycle. And again, what happens the next 1 month or 3 months, we may retest the lows that we saw a week ago. Or we may go back to new high ground in the next 1 to 3 months. Generally speaking, unemployment looks good. The economy looks good. Corporate earnings look very good, by the way, not only this year, but projected out. Corporate sales are going up. We're seeing improvement in wages, meaning wage inflation. These are net positives, not only from people getting raises, but additional to the bonuses and additional to the tax cuts. These are not crumbs to every American, and I don't care how rich you are. Anybody that's going to save $1,000 or $2,000 a year in income taxes, that's a lot of money. Anybody gets $1,000 or $2,000 bonus, that's a lot of money. I firmly believe that the Democrats are way off base, and I firmly believe the Republicans are doing a better job. One of the issues we're going to have, obviously, is our debt and deficits, which, again, whether you're Democrat or Republican, either side party, they always overspend. I don't care what they talk about. They seem to always increase that. It's not an immediate concern, but clearly it will have to be addressed someday in the future, but it always seems to be pushed down the road. If you're a client of our firm and you have any questions, any concerns, give us a call. Let's talk on the phone. If you're not a client of our firm, you should become a client. It's time you experienced the Resney Wealth Management difference. And of course, if you have friends, business acquaintances that need a good financial advisory firm, we always appreciate not only your business, but your referrals. Have a safe and profitable day.